Welcome back to Rockstock Channel. It is Tuesday, August 5th, and we are here today for the first time with Koby Kushner from Libra Energy Materials. Libra is the newest lithium company, I think, to list in the market. Just went public last month. The ticker symbol is LIBR. It trades on the Canadian Stock Exchange. Currently has a stock price of 14.5 cents, equivalent to about $8.3 million Canadian. So small market cap, very early stage. Rodney's here with me. We've known Koby for a few years. He used to be a sell-side analyst at Red Cloud Securities covering lithium. That's how I met him, and a few other people introduced me, to him. Rodney's reviewed what he has done to date as a private company. Having spent not too much money, but having made some meaningful, discoveries for the spend, and also has signed a significant relationship with KoBold Materials, a high-profile private company that Rodney and Koby will get into in a few minutes. RK Equity is an advisor to and hold equity interests in Libra Energy Materials for disclosure purposes. Koby, you can follow Libra on X. What's the handle, Koby?
You can find us at Libra Lithium or at Libra Energy Materials on Instagram as well. We're also on LinkedIn.
Okay, sounds good. Why don't you take it away, Rodney?
Thanks, Howard. Koby, as Howard mentioned, we've known you for a while, but this is your first time on the channel. So if you could, please provide us with some personal background and describe how you came to form Libra.
Sure. Well, I'm a mining engineer by trade. I spent about half my career underground, mostly in northwestern Ontario, a bit into Manitoba as well. Got to know some pretty intelligent geologists from my days working with Barrick at their Hemlo operation. And I eventually ended up moving back to Toronto. I'm from Toronto. I moved back to Toronto I pursued my CFA, made the switch over to sell-side equity research during COVID. So I worked at Red Cloud Securities, which is a mining-only investment bank in Toronto, and spent about 2.5 years there. Ended up working my way up to the analyst role. At the height of lithium, what I like to call peak lithium, we had a lot of companies that were getting financed, and it kind of just happened where I reached out to my buddies from my Barrick days, my buddy Ben, and said, look what is currently getting financed. I bet you have found more interesting looking pegmatite targets than this. And he said, actually, I have. Let me drive 3 hours west of my house. He lives in Thunder Bay. And looked at what is now our Flanders project, which is under the KoBold earn-in. Said, hey, we should stake this, but I can't stake it. I work for KoBold Metals. I'm not allowed to stake ground. So I go and ask my employer if I'm allowed to go and stake ground. And turns out I'm not. So Ben and I decided to eventually quit our jobs together and pursue this full time. In March of 2023, when we quit our jobs to pursue it. So it's been a fun journey since.
Excellent. Well, the lithium markets has been challenging for 2.5 years, pretty much all of that time, but you've survived and you've done some astute deals and made some discoveries at an extremely low cost. Can you just describe your business strategy?
I mean, we launched this with no promise to any of our shareholders, to anyone, that we'd be taking this public one day. So, the key to surviving was being forced to learn how to be incredibly lean. It's already hard enough to raise money in a private vehicle. And then when lithium took a hit, it was way harder, as you can imagine. So for us, we didn't allocate money to things like marketing. we weren't in trying to get our stock price up there and try and think about the next financing. It was really just, let's allocate all of our resources into learning and refining our own technical expertise. And so this business was always meant to be a long-term business. This was never, a hot promote or us trying to take advantage of a hot market and raise a whack of money. And any cyclical business, whenever you do that, you usually end up creating bag holders. So part of it was also, this is our first deal. We're looking for people that'll back us all the way through. So it was very important for me to manage the money like it is my own. After all, I am the second biggest shareholder in the company. Generally speaking, with lithium, it's very, people talk about it being an immature sector. I think something to add to that would be how exploring for it is also very immature. Keeping in mind, we didn't need to go out and explore for new deposits until very recently. It's only in the last decade or so as lithium started to get actual exploration funding, and you put that into context with other metals like gold, where we've been exploring it for millennia. We believe that there's a lot of low-hanging fruit out there, so you could do a lot of damage per dollar in the lithium space. So our strategy for lithium, for hard rock lithium, is we cast a very wide net. We then systematically work through our portfolio. As claims get upgraded, we expand, and as claims get downgraded, we look to drop them. So we do what we consider to be low cost, high impact exploration. So we're not in this kind of market where investors don't really reward good drill hits. We do what we call low cost, high impact exploration. So we're not looking to drill these things. What we're doing with lithium, which you can't really do with things like gold, is gauge the size of the prize very early on during the exploration process. So that you're standing on a significant pegmatite when it's plus 30 meters wide and it's mineralized spodumene wall to wall instead of just in a core zone. And if you're looking at 20% spodumene, it's going to grade very well as opposed to 5% spodumene pegmatite. And as well, you can even infer how it's going to recover based on how large the spodumene crystals are. And, if you have large coarse grain crystals, simple mineralogy, none of the fringe lithium minerals like amblygonite or lepidolite, it's going to recover very well. So with lithium, you're able to take the strategy of being able to cast a wide net. And what we do is we rank our projects on two broad qualitative categories, which is geologic potential, which is the size of the prize. Generally, we look for pegmatites that are minimum 30 meters wide. Most pegmatites being drilled in Ontario, most pegmatites that have been drilled in Ontario are usually sub 10 meters wide, just to give viewers color there. The exception, of course, being Frontier. And then, so we also look at something called explorability, which is a term we made up. And explorability is simply, if there is a deposit hiding there, how likely are we to actually be able to find it? So, we're not necessarily prioritizing projects that are buried deep undercover. We're looking for things that generally, with exceptions, generally outcrop out of the ground, where it's very quick to gauge the size of the prize. And if there is a discovery hiding there, that you're likely going to be able to find it.
Excellent. So, Koby, one thing that stands out in your company presentation is insider ownership. We consider that paramount in junior miners. Who are the major stakeholders other than yourself?
Sure. So yeah, I mentioned before, I'm the second biggest shareholder of the company. I own about 6.7 million shares. Our largest shareholder is David Goodman, formerly of Dundee Wealth and Dynamic Funds. His brother, Mark Goodman, as well, is a substantial shareholder. Zach Goldenberg, who's one of our directors, is a substantial shareholder. An advisor, Ray Harari, who's a capital markets expert. And then Ben Kuzmic, who was there from day one. So overall, 26 million shares of the 57.5 million shares that are held outstanding is owned by us. And when I say us, it's the posse of people that are locked up in this mutual pooling agreement. So essentially, none of us can sell stock until there's a real change of control event. So we're basically locked in for terminal value. Again, this is a long-term business, and when we capitalized the company initially, it was done with very, very few hands. So it's not like we peppered the street with founder shares and created a share structure that's kind of doomed to fail from day one. It was done very organically, and we raised money when we needed to raise. So as a result, we've been able to preserve our share structure.
And Koby, lithium has been the major focus for Libra, but the company is named Libra Energy Materials. Does this mean you're open to adding other critical metals projects?
Yeah, certainly open to it. I think there's lots of investment overlap with lithium and other critical metals. So Libra, we are in acquisition mode right now. We're here to take advantage of volatility in lithium. And on our M&A shopping list, we have opportunities at the project level as well as the corporate level. So some of the projects that we have our eyes on happen to be, in addition to lithium, they're also prospective for other metals. And then some companies that we're looking at potentially acquiring, in addition to their lithium portfolio, they have other energy material assets, let's say. So I'm somewhat limited in what I can say right now, but once the news is out, it'll all make sense. I'd say we are mostly focused on lithium. And then if we happen to be acquiring other assets as a result of us going after lithium, then great. That's free upside.
And you touched on it, and Howard mentioned it earlier. You've done a meaningful $33 million earn-in deal with KoBold Metals, which includes $35,000 a month inflow as the exploration contractor. Can you expand on what exactly the deal entails and the impact of that monthly income on Libra's monthly burn rate?
I mean, it's roughly equivalent to our burn rate. So what that means is that if times ever get incredibly tough, you're a public company, you have a higher burn rate as a result of being listed. Even if you're not doing any marketing, lawyers and audit. So for us, that's huge, because if we need to, we can always turn the switch off and be incredibly lean and be able to survive. So for us, as a very lean company, our G&A is already very cheap. That's substantial. It means that what it avoids for us is a case of one of those keep the lights on financings, which in my experience very rarely work. So that means that when we raise money, we're actually able to put it into the ground and try and get something meaningful with the amount of money that we raise. So hard dollars are hard to come by. Flow through is generally much easier. And that's important for us because we don't need to go out and raise hard dollars if we don't want to. Yeah, so that hopefully answers the burn rate part of the question. But for what that deal entails, it entails a reputable partner that, in our view, is able to better increase our odds of making a discovery. They have much larger resources than we do. I mean, they recently raised, I think it was last October, they raised over 500 million US on a almost $3 billion US valuation from some of the biggest investors globally. So they have really talented geologists as well as data scientists and a massive team that, in our view, is going to help us with making additional discoveries. And the great thing about that is that because it's an earn-in deal, that they're generating those catalysts and news flow with their dime instead of ours. I think it also, just to add to it, it adds that third-party validation. It's one thing for me to tell you that, our assets are good, but to have KoBold come in there, a player like KoBold, do that due diligence for you tells another story.
Well, I mean, Koby, you've got some prominent neighbors surrounding your projects. Can you just name a few of the main players?
Well, let's try SBC and Toivo because they're near each other. Of course, we have KoBold, who's built their own land position as well. And then we also have a little Aussie company called Fortescue that's also in there. And then looking at Flanders, there's not really too many neighbors. I guess GT1's not too far away at their Wisa project. Looking at some of our stuff in Quebec, near Nemiskau, which is close to the Pontax trend. It's not too far from Patriots' Pontax project. It's also not too far from Lift Power's ground. And then we're also right next door to Azimuth Exploration as well. And then at our newly staked Waguchi project, that's somewhat it's a long trend of the Waguchi project, which is now owned by Rio Tinto.
And if you can you just give an overview of those other projects that you own outright?
Sure. So Toivo is one that we own next to SBC. So after we made our SBC discovery, this time last year, the first thing we did is we staked what we thought was the most prospective ground in the area, and that was Toivo. You could see what appears to be pegmatite targets from satellite imagery, so it excites us. SBC is an exciting discovery by all measures. It won a Discovery of the Year award last year. So that's one of them. We have Nemiskau in Quebec. So the Quebec geologic database is overwhelming, to say the least, and what you're able to do with it is impressive. So you can filter pegmatite in the database and filter through like exposure width. How wide are these mapped pegmatites? And we have at least 3 mapped pegmatites that haven't been tested on our Nemiskau project. Location wise, it's the right geology. It's close to sub-province boundary. It's in a known lithium bearing trend, the Pontax trend, and these pegmatites are untested and they're large. So it's one of those simple. Cost of the test is really cheap, but the upside is very large. If you've got plus 50 meter wide pegmatites, that's substantial. You can infer that that's going to be substantial tonnage. And at Waguchi, that's something that it recently came open. So one of the opportunities in lithium right now is a lot of James Bay and a lot of Ontario was entirely staked up for lithium at the height of the rush a couple of years ago. And now a lot of that ground is starting to come open. People overstaked. People didn't often staked and didn't even explore. So now there's a lot of ground that's starting to come open, and Waguchi was one of those targets that we had our eyes on, came open, and we staked it. And that one is, we see what appears to be large pegmatites from satellite imagery. And then it's also the right address. It's right along that geological sub-province boundary, same geology that hosts the Waguchi pegmatite. So more on Waguchi as time goes on. Obviously, the name is somewhat of a play on Waguchi now that I've said it a bunch of times.
And Koby, there seems to be decent infrastructure surrounding your projects. Would you say that's a comparative advantage for Libra?
Absolutely. I think a lot of people forget that, or either forget or don't realize that hard rock lithium is a bulk product. So it's not like gold, where your end product is doré. What you're doing is you're taking a 1 to 1.5% deposit, you're concentrating at site to somewhere between 5 to 6% Li2O, and you're shipping that concentrate, like essentially a gravel. So you're shipping way more material than you would for, say, a gold mine. So your access to infrastructure is going to impact your economics substantially more. So like if you look at Patriot's PEA on, I'm going to butcher its pronunciation, on what was formerly known as Corvette, the transportation cost alone was about 30% of their cash costs. Like that's pretty substantial. So being near a road and being near a rail is absolutely crucial. I don't think lithium is that scarce that we do need to be searching for projects or for lithium that's in very remote places. And for us, being near a road is huge, but also being able to get your product over to rail where it can then go to a port is substantial. So in Ontario, we're generally able to get we're near roads that we can then move it over to rail within 100 kilometers of rail. And then from rail, we can get it right to Thunder Bay. Thunder Bay is a major port city. All the grain in Western Canada, the last stop before it gets to Thunder Bay, or before it gets to the port, before it gets to water is Thunder Bay. So it goes to Thunder Bay, then it goes down through the St. Lawrence River, can get to the US market easily through the Great Lakes, but it can also get to the ocean from there.
And the Canadian lithium names have come under pressure in this down cycle, as have all companies, but particularly Canadian. What do you see as the required characteristics for lithium projects to be funded and built in the region?
Sure. Well, I think you need large tonnage close to infrastructure. So, I'm not of the view that these 10 million ton at 1% deposits are really going to make the cut unless there's substantial exploration upside. You want to have wide pegmatites that's going to substantially lower your strip ratio, have larger, also infers a larger deposit. And you also want a consistent source of feed. So I don't think, I don't think we want to be blending different materials, different sources of spodumene in order to feed a hungry converter. So I think you want to see somewhere between 30 to 50 million tons of material from one single project area with a simple, easy, as Howard would say, simple spodumene stupid type of deposit, low impurities, large coarse grain crystals to make it easier to DMS. And yeah, as I said before, most pegmatites being drilled off in Ontario, other than Frontier, are sub 10 meters in true width. So when we look at projects, at the minimum, we want to see potential for pegmatites that are at least 30 meters width. And pegmatite width being a good correlator with the tonnage potential. And then infrastructure as well, as I mentioned before.
And in terms of philosophy, Koby, do you encounter many acquisition opportunities, or is your preference, given you've had low cost exploration successes, would your preference be to look for greenfield ground instead?
I think we could do both. So, we can continue to stake new projects ourselves. I mean, that's the cheapest way to acquire things. But right now, there's an opportunity in the market to go and, it's a buyer's market for lithium projects. A lot of companies that entered the Canadian lithium rush are no longer even lithium companies often. You've seen a lot of them pivot over to the next hot thing, whether that's gold or whether that's uranium or something else. So a lot of these companies don't even talk about their lithium anymore. They'll basically give it to you. So, yeah, I mean, there's low cost exploration success, and there's also low cost acquisitions for something that might already have a discovery on it. And what I've seen in this journey of taking Libra public, when there's not a lot of other companies in lithium going public, is that it's proven to be a magnet for M&A opportunities. There's really not a lot of people consolidating the sector. Really not a lot of people or companies trying to consolidate the sector, especially as you go further into the junior side of things. Obviously, you've got Rio Tinto who's consolidating the sector, arguably, but or Pilbara buying Latin at the bottom. But there's not a lot of companies doing that on the junior, grassroots, earlier stage side of the business.
talking of Libra and Latin, is Canada going to remain your only jurisdiction, or would you look outside its borders for opportunities?
Certainly looking outside, we've looked at projects all around the world. Generally, we prefer something that's on our time zone, so within the Americas. Um, when stuff is as cheap as it is right now, it's hard not to be not to consider things when you can get it for a price that I don't think we'll be able to get in 2 years' time, call it. So we're certainly open. We are certainly looking, but limited in what exactly I could say right now.
Okay. Your balance sheet is clean. It's got very few outstanding warrants and options. How have you managed to achieve that whilst growing the company so quickly?
I think having a blown up cap table is often the result of needing to do more desperate financings where you load up every financing with warrants. We have never issued warrants in our company. I'm not saying that we won't ever, but to date we just haven't needed to. We've been the lead order on most of our own raises ourselves, so people have kind of followed suit. And I mean, it certainly helps that you're attracting the right shareholders when you often add a warrant. What I see is like the worst is like those life financings where you tack on a full warrant onto it, and it just attracts warrant clippers, so people that immediately get in, sell your stock, and clip the warrant. So because we raised money privately and with our investor base, we've made no promises that we'd ever be going public. We naturally attracted better investors as a result of that. So it's a very tight cap table, which is a blessing and a curse. I think it's more of a blessing in the sense that there's not a lot of stock out there in the free float. So it's hard to build a substantial position without running the stock up. And it's also the downside would be that it doesn't take a lot of selling in order to take us substantially down. So it doesn't take a lot of buying or selling to move us in either direction because the flow is so tight.
And lastly, from me, Koby, is what milestones can investors expect to get feedback on in the next 6 to 12 months?
Sure. So number one would be exploration results. We haven't actually released any from this field season yet. And the next would be M&A opportunities. So doing what we're saying we're going to do, we're going to continue doing low cost, high impact exploration. And we're also going to be announcing some acquisitions shortly.
Koby, that's great. Thanks very much for that input. A good first time flyby on the channel to give viewers an idea of what's happening at Libra. And I'm sure we will have you back soon with more information.
Right on. Thanks for having me, Rodney.